In crypto, we have no problem with user acquisition. Getting people to buy tokens and speculate on airdrops is not something that we have any problem doing. Unfortunately, the main thing that we have a problem doing is retention.
Let's open up our Founders Corner, and there's no one better to give us the pulse of the investing space right now than our next guest, Shawn Cheng, partner at Consensys Mesh. Shawn, welcome to the show.
Thanks for having me, Jen.
All right, we're sitting in February already. I can't believe that January just flew by. What are you looking forward to for the rest of the year?
There is so much going on. I think the markets have priced in some of the things that I think we were anticipating, whether it was the halvening, an ETH spot ETF, also Ethereum upgrade around Duncan, and even just the excitement around the convergence of AI and crypto. There seems to be something new and interesting every day. And even coming off the weekend where you saw a massive amount of people posting their Vision Pro experiences first person, and even just the unintended implications of what that might mean for the role of Web3 and crypto is probably some of the areas that I'm most interested in watching.
It's interesting you brought up the halving, you brought up the Denkun upgrade, and you said that the markets have priced those in. Does that mean you're not expecting to see big market movements when those two events take place?
I would never call volatility out, especially in our industry, but I do think that the irrational exuberance maybe got a little ahead of ourselves. I think what's not priced in is the amount of innovation that's going to happen, and especially that around the discovery of spatial technologies and the role of Web3 in how AI actually establishes itself as a way to attract developers from developing and building companies the old way into kind of this new way that we're starting to see.
When we talk about the convergence of AI and crypto, I think traders maybe think about the AI tokens that rally on AI news and then go down when we have some not so optimal AI stories. What are you watching when it comes to the convergence of AI and crypto? Does it go beyond just watching the tokens go up and down?
Oh yeah, I mean, a lot of these players are still in their installation period, so delivery of actual value is something that every open protocol and token is struggling with. I think writing the rules so that it's fair over the course and the life of a company is the name of the game. And so in crypto, we have no problem with user acquisition. Getting people to buy tokens and speculate on airdrops is not something that we have any problem doing. Unfortunately, the main thing that we have a problem doing is retention. I started my career in search at Razorfish way back in kind of the heyday of Silicon Alley here in New York, and retention and conversion rates where you could actually charge your customers or your brands based off of whether or not they actually converted to a sale was a huge innovation. And even though that was kind of at the dawn of Google replacing Yahoo, we're seeing the same thing in Web3. We're seeing kind of this new world where people are saying, hey, I'm going to pay out the nose for the acquisition, the cost per click or the cost per 1,000 impressions. But really, it should be cost per acquisition. It really should be about active users and an open discussion around, well, what is an active user and what is a valuable user to my protocol or to my product? And that's where I think a lot of innovation is going to happen. You know, one other thing that happened this weekend was an organic hackathon around frames and decentralized social. And people are building bots, people are infusing LLMs into autonomous agents, people are putting each of these kind of new little micro brains into autonomous worlds. And it's exciting because the incentives that are underpinning all these things are going to change the very essence of how we grow and share value over time. Not just at the beginning, but over time, which is the most exciting part.
It's interesting you bring up the value of the user and really focusing on determining the value of a user. Do you think that founders have paid enough attention to that up until now? Or, are they just looking for as many folks in the Discord, as many people following them on Twitter, and they're not really paying attention to the value that these people are bringing?
I don't think they are. I think it's very short-sighted. A lot of these incentive programs are just for the flash in the pan or just for the token launch, and they're not thinking far enough out. I'll give a Web2 example. Kith just launched their loyalty program, and one of the ways that they're launching their loyalty program is actually recognizing historical purchases. Now, you might equate that to previous on-chain transactions that someone maybe have connected to a chain or bridged assets or done some swaps here and there, but it doesn't really take into account multipliers for referrals or even how the health of those interactions lead to very rich interactions and participation. Perhaps we should be weighting these things a little bit differently, especially with regards to what a protocol values over time. And so I think founders and protocol engineers and token designers really need to take into account some of these old world playbooks like American Express. Think about the points. Think about Delta. Think about the points there. Think about how each of these systems all are designed to make sure that the system is growing in value and that the customers are able to participate in that value over time. And so I think a lot of Web3 has actually something to learn from Web2 and all the disruption and all the desire to actually make things better.
Let's draw on your experience. Where do you see VC money focusing on? We've mentioned a few different things like loyalty, you just said, Apple's Vision Pro headset, which maybe brings the metaverse back into the conversation. Where are VCs focused, do you think, heading into 2024?
Yes, I think the convergence of both spatial media and AI with crypto are all going to converge, and each of them are going to be able to take the strengths of each industry and create something new. So we talk a lot internally and amongst VCs about multimodal approaches. So how do you go from your mobile phone into the Vision Pro back to your desktop? And as you're thinking about how you're experiencing each of these new applications, what does it mean to actually be contributing to each of these over time? And so I'm most interested in whatever use case attracts the most amount of developers. In the world, there are not that many developers that make a living off of developing applications. And I think it's around 24, 25 million in total. In crypto, we have less than 1 million. We have hundreds of thousands of developers. So if you believe that developers is a leading indicator of where value is going to come from, then these intersections of kind of innovation are going to be the areas that I think developers are going to be able to find the most value. So that's where I'm focused. That's where I know a lot of other investors are focused, is trying to find what is the fountainhead of this value. So if it's not just about speculation around tokens, and it's not just about projects that have a lot of hype behind them, what are the next waves of inputs that allow for us to create new outcomes from these primitives? So large action models, autonomous agents, autonomous worlds, and even thinking about interesting data sets that we haven't fully brought on chain, like location-based data, or even chat data. A lot of these things are going to improve with the latest Ethereum upgrade and some of these other layer zero like models, where the cost of these transactions and storing this data and accessing this data through data availability is going to all improve. And so it might not just start with a financial story, it might actually start with something like a friendship or a shared interest or dating, or things that which we're just so used to in Web 2, where you're on Bumble, you're on Hinge, you're on Snapchat, you're on Reddit, you're doing things without having to think about a financial element to them. You use these products because they bring value to you. They bring distraction, they bring entertainment, they bring social connection. They provide value to you without necessarily needing you to think about what is the cost conversion or the conversion of this token to a stable coin or Ethereum or Bitcoin.
It's interesting that you brought up ecosystems that attract developers, because we often hear about ecosystems really putting their energy into attracting users. Do you think that that's putting one foot before the other, maybe prematurely? Should ecosystems be looking at attracting developers to actually build something that users need?
I think the game to start an L1 from scratch is about to change, especially with major players like Eigenlayer, where you're going to be able to access shared security without having to raise millions of dollars, launch a developer program and an incentive program. You're going to be able to just focus on building a beautiful and amazing application that's user-friendly. And so if you were an L1 in 2023 and before that, I think, yes, it did take a lot of effort to bootstrap both the demand and supply side, whereby which you needed to appeal to end users and offer a faucet, bridges, on and off ramps to fiat, and also a developer program where they had a reason to show up and build something even though there was no audience. But in this new world with modularity and also being able to access each other's communities, we have products like Hang and Spindle, and even products that will allow for you to port audiences from place to place. And I'm very excited about how these basically Web3 affiliate models start to propagate new social networks without there necessarily being a need for a platform. So things like Warpcast, I think, are very exciting because you don't necessarily need to just believe that Warpcast is the only client. You could have many different clients and many different configurations without the fear of being susceptible to platform risk. And so I think those are definitely some of the areas that we're paying attention to for founders that have to think about both the end user and also the developer in this coming year.
Shawn, thanks so much for joining the show today.
Absolutely. Thanks for having me, Jen.
That was Shawn Cheng, partner at Consensys Mesh. That's it for today's show.